Look, honestly, the truth about Dubai real estate is not as straightforward as you think, and industry insiders don't want you to find this out. But what if I told you that some of the most popular investment advice in Dubai right now is actually backwards? Off-plans cheaper than ready, rents already at all-time high, villas being overpriced. The data actually tells a very different story. Today, I want to walk you through 6 Dubai property trends investors simply cannot ignore anymore, all backed by real numbers only. No personal opinions. And as always, I'm bringing you the unbiased truth in real estate. So if you find this useful, please hit the thumbs up button. It really means a lot, especially if you will be so generous to subscribe. And let's get into the video. Trend number 1. Let's start with the most shocking one. Off-plan prices are now higher than ready. Yes, you heard me right. And now, this is official because based on the 2025 data from DXB Interact, median off-plan prices in Dubai are higher than the ready units, and not by a small margin. Take Business Bay as an example. Median ready one-bed price in 2025 shows 1.4 million dirhams, while median off-plan one-bed property price is at 2.2 million dirhams. That's an 800,000 dirham premium for a property that doesn't exist yet, has execution risk, and has no immediate cash flow. By the way, I'm not saying this is bad. I personally invest in off-plans, but this is what the data shows in a general perspective. Even in traditionally affordable areas such as JVC, median off-plan one-bed property prices are still around 200,000 over the ready ones. Now, to be fair, some off-plans justify the premiums. First, we have the waterfront positioning, which really is rare, and in Dubai, it really sells, and you will usually see capital appreciation. Landmark developments, something like Burj Khalifa, although currently we see not too many sales in there and people are kind of complaining, however, it still makes a big difference. And finally, long-term infrastructure play. If you're getting into a master community early, then you will most probably see some upside potential there. So something like it happened in Dubai Hills or in Dubai Greek Harbor. But for the majority of standard one-bed investor stock, this price inversion is a clear sign of overheating, not real value. For cash flow driven investors, this trend should make a reset into your thinking alone. Villas and townhouse prices are rising because demand is structural. Let's talk about the villas because this isn't speculation anymore. Looking at median villa price per square foot, prices are rising in line with demand, not hype. According to the graph that I'll pop on the screen in DXB Interact, we see that the Dubai property price change for the square foot over the years is slowly going up, and it really took scale from 2021 and now reached 1,520 dirhams per square foot for the villas. This is a 13% increase year on year, and versus 2014, it's a 106.6% difference. So you'd ask me, why does this happen? It's mainly because the Dubai population profile has actually changed. More families, more long-term residents, more ultra-high net worth individuals relocating permanently, not just buying as an investment. According to international wealth migration reports, over 6,700 millionaires, but I've heard figures way higher than that, moved to the UAE alone in 2025. This figure is one of the highest globally. And guess what they don't want? Small apartments. Obviously, they will opt in for those townhouses and villas. However, if they don't go for the townhouses or villas, they still want gated communities and some lifestyle living, so they will aim at those larger units overall. Supply of villas is structurally limited, while demand keeps growing, which is why villa pricing behaves very differently from apartments. This is not a short-term cycle, it's a demographic shift that should sink in. Adding to trend number 2, the next trend that I've spotted is that the villas are the top resale performance in 2025. If we look specifically at resale performance, and by the way, we're just analyzing numbers, not opinions and not ideas, real number data. Villas show the highest year-on-year price growth. Based on the Dubai property average prices, the villa is at 3.7 million and it's 12.1% increase year on year. They outperform apartments on both absolute value and price per square foot. So if we look at the price per square foot changes for the resale of villas, we can see that it's at 1,480 dirhams, and that is 17.8% increase year on year. That really is significant. While on the other side, we can see for the apartments is actually only a 6.8% increase year on year. So why does this data matter? Because resale performance reflects end user demand, because most of the cases in resales for villas and townhouses in particular, this will go to the end users. And if the investor even bought it as an investment, most cases they will keep it until it's completed. So in the case of an off-plan villa, then they will just wait until this is handed over, and then the buyer, most cases, will be the end user. And to back up this point is mainly because we see that the sales of those villas are either purchased in cash fully by some people who will relocate there and they actually live in there, or they're purchased through a mortgage. So that definitely proves that the person who gets that is probably getting that for their family to move in and not pay rent. Resale performance also reflects liquidity and willingness to pay real money today. When villas lead resales, it tells us that the buyers are not simply reserving the units, they are closing those deals. For investors thinking about their exit strategies, this trend is critical. Trend number 4 might surprise you, and that is that the rents are rising, but we're not at the peak yet. Yes, imagine that, you heard me right. And let's look at the data. This is another big myth that I want to challenge. Everyone keeps saying that the rents are at all-time highs. The data says otherwise. Looking at the median yearly rent for one-bedroom apartments in Dubai, the historical peak was at around 64,000 dirhams in 2016. In 2025, last year, we were close, but we're not above it yet. So if we look at the yearly median rent in 2025, we're actually at 61,000 dirhams. So we still have a small gap. That's important because today's rental growth is happening alongside higher population, more households, stronger employment base in the region overall, which means this isn't just inflation, it's real demand growth. So while rents feel expensive, they're not stretched historically when adjusted for market size and occupancy. This trend was really interesting because it shocked me as well. I personally thought that the rents are at all-time highs, but apparently they aren't. And most importantly, with this population inflow, with so many people actually moving to Dubai every single year, this is a very interesting turning point, leading into the trend number 5, which is rental contracts have tripled since 2016. This is one of the most overlooked data points, and honestly, I was again shocked at looking at that. The number of one-bed rental contracts in Dubai has nearly tripled since 2016. So if we look at that graph that I'm showing you now, the yearly contracts for one beds in Dubai in 2025 was at 134,000 contracts, comparing to, 2016 at 40,000 and 2015 at 38. Let that sink in. Yes, rents have gone up, but so has the tenant volume, household formation, and resident population overall. This means demand isn't actually slowing. Vacancy risk, especially for one bedrooms, because that's usually the choice someone makes when they relocate to a new country, at least before they understand where they want to live. If they need a bigger place, if they want a villa or townhouse, usually they would go for a 1 or 2 bedroom. Rental pressure is structural, not speculative. When prices and volumes rise together, it's usually a sign of a pretty healthy market, not a bubble. And yeah, you might challenge me in saying that, but even I was challenged when I looked at these numbers. And this is why cash flow focused investors are still doing very well. Now, the final trend is policy driven and very important. Government and the developers are trying to tilt towards the residents. Not all the developers, definitely. We already spoke about off-plans being overpriced, that there are many who actually tried to give some better offers to the actual residents, and also we speak about the governmental initiatives. The Dubai government has recently introduced initiatives such as the first-time home buyer schemes aimed at supporting resident ownership, improving affordability, and encouraging long-term settlement. At the same time, some developers are also adopting more 1% monthly payment plans appear, more resident-friendly structures, and definitely more communities with actual nature or some interesting parks that will really serve the purpose for those residents who aim to live long in Dubai. And there is more competition with traditional mortgages. This is usually happening because the mortgages are getting somehow harder, especially for self-employed buyers, new residents, and entrepreneurs. So instead of restricting the market, Dubai is actually adjusting, something many global cities fail to do. So what this all means for the investors? When you connect these 6 trends, a few conclusions become obvious. Off-plan pricing needs to normalize. Villas and townhouses remain structurally strong. Rental growth still has room. Crazy, but it does. Demand is population-driven, not hike-driven. Policies are increasingly pro-resident and pro-investors. This is not a market to blindly follow headlines in. It's a market to now analyze deeply. So it means that Dubai isn't a simple market anymore. And that's actually a good thing. The easy money phase is gone. Now it's all about data, discipline, structure, and exit strategy. And that's exactly why I keep pushing for unbiased analysis, even when it's uncomfortable. If this helped you to see the market differently, hit a like, subscribe to see more, and I'll see you in the next one.